Yeah, so let's see what's happening in the global scene. We're beginning with oil, or not just oil, commodities generally. The numbers are crazy this morning. Well, oil is headed for the biggest weekly gain since late October. Traders are tracking partial U.S. blockade of the crude shipments from Venezuela and the military strike by Washington. That's in Nigeria. Global benchmark we see traded above $62. And more than 3% higher this week, while West Texas Intermediate crude was near $58. On Venezuela, a sanctioned tanker pursued by U.S. forces turned away from South American nation as the Trump administration piled pressure on them. And then still talking about commodities, but another type of oil, that's palm oil. Palm oil today continued to climb for a fourth session, reaching its highest level in 2 weeks. On the back of increased demand for Malaysian products. Exports from second largest grower Malaysia rose 1.6% month on month during the first 25 days of December. And then India was top buyer with 279,550 tons imported. That's 66% rise compared to the same period in the previous month. And then gold and silver. This is like the third time this week. Gold and silver, they're surging to fresh record highs as investors flock to safe haven assets amid escalating geopolitical tensions and weakening U.S. dollar, and that extends a powerful year-end rally in the precious metals. You know that apart from the geopolitical issues, there's also the weak dollar. So spot gold was last up 0.6%, 4,506.76. An ounce after jumping to a new record peak of 4,530 per ounce in the earlier day. U.S. gold futures for February delivery rose 0.7% to $4,537.55. Gold prices were set to jump nearly 3% this week alone. Investors are seeking protection against that rising global uncertainty. Spot silver prices also surged more than 4% to hit a record high of $75.14, and it's set to jump, analysts expect it to jump about 7% by the end of the week. So we'll see what happens at 1:30, see if there's any more movement on these commodities. Also, copper is also surging. It hit a record high in Shanghai and rallied in New York, adding to substantial annual gains as investors bet on tighter global supplies in 2026, while also pricing in the impact of the weaker U.S. dollar. That's also a major factor. In China, prices gained 2.7% to 98,780 yuan. That's about $14,000 a ton on the Shanghai Futures Exchange, while contracts rose 3% to hit 5.743 a pound on the COMEX. For the U.S. benchmark, that's the highest since an unprecedented short squeeze in July. The London Metal Exchange will reopen on Monday, so we don't have numbers from that. They're on break now. China's Statistics Bureau revises down. That's moving on now, away from the commodities. The size of China's economy in 2024 has been revised down to 134.8 trillion yuan. That's about 19.23 trillion naira in nominal terms after final verification, and this is according to the country's Statistics Bureau. The final gross domestic product was placed at 101.8 billion yuan. That's lower than the preliminary data, according to the Bureau. In July, the country's state planner said that the Chinese economy will exceed 140 trillion yuan this year, but obviously that has changed now. It's been revised down. And we're still in China today. They said that they will continue to regulate crude steel output and prohibit the addition of illegal new capacity between 2026 and 2030. If you remember, in 2021, the world's largest steel producer and consumer, they put an end to growth in crude steel output as part of a plan to limit carbon emissions. Now, the mandated output control also came as domestic steel consumption has hit by a protracted property market downturn. That's a major story this year from China, and left the industry plagued with overcapacity. So in the first 11 months of this year, China's crude steel output fell 4% from a year earlier, keeping the annual total on track to fall below 1 billion tons, and that's the first time that's happening in 6 years. We're still in China. The country has officially launched a national venture capital fund. And the three large regional funds together worth billions of dollars. It's part of a push to foster homegrown tech champions and improve investment efficiency. The National Startup Investment Guidance Fund, as well as the three vehicles covering the Beijing region and some other one, also the River Delta and the Greater Bay Area, they start operation today, according to authorities in China. Moving over to Japan. Japan plans to reduce sales of government bonds during the fiscal year that's beginning in April. They're focusing on cuts to super long debt. Total issuance of government bonds to institutional investors through auctions, they say, will be at about 168.5 yen, a trillion yen, that's about $1.8 trillion, a reduction of 3.8 trillion compared with the initial plan for the previous fiscal year. This is according to the Ministry of Finance from Japan. And we're still in Japan, where industrial production fell more than expected in November, while retail sales posted modest growth, highlighting an uneven economic recovery as weak overseas demand continues to weigh on manufacturers. Industrial production declined 2.6% month-on-month in October, more than expectations for a 1.9% decline, and reversed from 1.5% rise in October. The data underscores persistent pressure on Japan's export-oriented industries. That's Global News.